Welcome back to the channel, guys. I'm sorry I didn't do the top 3 option plays on Sunday night like I normally do, but I felt it was important to see what happened Monday because I was feeling a bit skittish about how Monday would be. Thought it would be pretty red. I think I even said last week that my target was 465 by the end of last week, and we hit that, and I thought there was room to go further down. But after the movement today, I think we can start putting on some more put plays. And I think I found 3 plays that are pretty relatively safe, or at least stuff that fits my risk profile. So let's go ahead and jump into it and show you guys what I found. So if we look at SPY, you can see that the low was 456, which is even lower than I thought we might go. But if you look at the volume profile here, like there's not much volume between 468 and 451. So there was room for it to drop. Sure enough, it did go down. It found some previous support to move back up, which makes me a little bit more bullish now than I was going into the week. But if it did get through this 452 mark and drop to 440, man, there would be a lot of people hurting. So I just wanted to see what Monday would do in terms of the market overall. And just looking at SPY is a decent indicator of what's going on. So that's what I was looking at. As you can see, RSI is neutral, so the market's not sure if it's going up or down. Implied volatility increased a lot, so now it's a good time to sell some premium because it's going back up. So option prices will be higher, so now we'll get some better entries into our positions that we want to get into. If you look at the 5-day, 5-minute chart, you can see kind of where the volume is, and it seems to establish a decent level of support around this area here at 458. If we fall through that, that's where things would get scary. It should gravitate back up towards 467, which it did at the end of the day. So like this volume study does help you out a lot if you know how to use it. So let's go ahead and jump into like the first trade I'm looking at. Beyond Meat. So they've had some good news recently. They're being put in the Kentucky Fried Chicken. They're being tested for. It's like there's a bunch of positive news, but yet recently the stock has just been beaten up a little bit. Just looking at the 20 days, like it was at 73. It jumped all the way down to 63. If we look at the 2-year 1 day, the low is 48.18. So I'm actually going to go ahead and play around with that to make this option play because I think that'd be pretty safe. Like you're buying at the 2-year low if you get assigned on this position. So that's why I'm thinking this could be a decent one, especially since the IV has increased. We can get further away from where we're currently at for the stock price. And I think that's why this could be a decent play. If we go to the Analyze tab, add Simulated Trade, what I'm looking out at is a month out. So let's go ahead and switch this to February 18th. Actually, it might help if I had this on BYND. So about a month out, and I'll be looking at the 45 mark. Sell one of these bad boys, and you're collecting a pretty good, almost 2% return for a month hold. If you want to be a little safer and buy like an extreme discount if Beyond Meat goes down, you could sell the 40 and get a 1% return for a 1-month hold. Actually, I might just do that. Get 5 delta for a 1% return. Like, I love when the VIX is high because we can do that. So I take that back. I'm going to go for a cheaper 40 put here on 418 to get like a 1.25% return because you could probably get filled at like 53 on this. So that's what I'm looking at. I think Beyond Meat's going to go up, so this is maybe a little too conservative, but it's an easy 45 bucks, I feel like. All right, so the second play I have is going to be Realty Corporation, or AKA O. It's a REIT that pays a monthly dividend, and honestly, I just think it's a good stock to hold long term. So getting put shares is okay, which is why I'm okay selling puts on the stock. Looking at the 1-year chart, you can see there's a lot of volume at 68, so I'm going to try to get below that. We're trading at this peak in volume, which is okay. I just want to be below this one in case it goes down with the market. Although if you look at the performance today, it only went down $1 when SPY dropped like 10 points or whatever it was. Switching to the 1-minute chart, you can see the low was 750, and this is when SPY was dropping like crazy and everyone was getting fearful. And O just didn't chase it too much, I don't feel like. So 70 off of all that fear that was happening just kind of made me more bullish on O. So what I'm looking at is simply going out 1 month and looking at the 67.50. It's only a 1% return if you get filled at 65 or so. But again, this is one I wouldn't mind owning the shares. And I think if we did get put shares, If we go back to the chart, it's just going to be a nice sticking point where we can sell cover calls and get out. Or, collect a dividend while we're doing that. Because if you see the volume, 68 is kind of a sticking point. And below that, we should have support at 65. So if you do get put at 67 and it goes down to 65.60, that's only $200 loss minus the premium you get. So was it $140 loss if we get down to this level of support? So that's just kind of what I'm thinking about O. Is I think it's a relatively safer play than I've been doing recently. And worst case scenario, you own some shares of O that collect a dividend every month. All right, the last one I'm considering is IWM, the Russel 2000. And basically, if you just look at the 1-year chart, it hasn't traded below 204 in a year. So that's pretty nice. And then if we go to the 2-year chart, looking at the volume, if it did get below 200, we might see a slowdown at like 195. So if we could put some shares, maybe we can manage it at this area if stuff goes wrong. But honestly, it looks like we're at the lower end of the channel it's been trading at. It might be a good time to sell some puts. So I'm looking at 1 month out. And I'm actually targeting like the 202, maybe the 200 mark here. And then look to have it just automatically close like with 11 days to go, just in case something happens. So the price I'd be looking to set my close order at would be the same as it is right now, for 11 days away. So if I do the 202, I might set a sell order for about 70 cents or 60 cents if I do the 200. So just set it and forget it, basically. I think the market's going to trend up, so that involves, I think that also means that the Russel's going to go up as well. So there you go. There's the 3 trades, but as always, guys, do your own due diligence and make sure that these trades fit your risk profile. And make sure you know how to manage your trades. If you don't, you can check out this video. It shows you how to roll some options using the Interactive Brokers tool. And thanks for watching, guys.